with a view to forge ahead in the new year, especially in the area of finance. And that's what we'll be discussing with the acting MD at Codrus Asset Management Limited, Mr. Gbola Aina. Good morning, and thank you for joining us on the program. Well, just before we get into that conversation, I'd like to get your thoughts about the budget for the 2021 fiscal year that was recently passed by the Senate.
Good morning, BC, components of the season. So, like you rightly said, the Senate passed it last Monday, and we expect the President to pass it tomorrow, being the end of the year. I think the good thing is that last year they were able to adjust the budget cycle from January to December. These are something they've been trying to achieve, and the President is able to pass it tomorrow. That means the budget cycle from January to December is going to old sway, which is good. In terms of some of the budget assumption, oil price at $40 per barrel, daily production at 1.86 million barrels per day, 300,000 barrels per day, exchange rate of 379, GDP growth rate of 3%, and inflation closing rate of 11.95%. So, just to mention that this budget is like the biggest of all time. So it's 13.58 trillion. Last budget was about 10.3 trillion. The initial budget that was presented was about 13.05 trillion. The National Assembly had to adjust it by about 400 billion. They made mention that 350 billion for National Social Investment Program, and they also made about 100 billion for recovery. So, by and large, I think this is audacious. If the budget can be achieved, I think it's going to help the country come out from the recession that we are currently in it. I think the exchange rate of 379 maybe a bit low, considering the sort of pressure that we are facing in terms of exchange rate, and also inflation rates at 11.95. Also to mention that in the past, people have always advocated for the capital expenditure of the budget to be higher than recurrent expenditure. That's not the case now, but we're seeing a huge 4.1 trillion that's going to capex, which we think is good. So by and large, I think if the budget can be implemented, I think it's going to help Nigeria please come out of the recession that we're currently in at the moment.
But from an investor perspective, what are the obvious opportunities from the budget?
Okay, I think one thing that is notable is the fiscal deficit. So from the fiscal deficit, we expect government to raise funding domestically and also from Eurobonds as well. So that's going to provide opportunities for investors to invest in the debt market. We saw a lot of subscription in the debt market this year. We expect that to also happen next year as well. And like we mentioned in the past, we expect rates to begin to tilt up sometime in H2. So people are going to be able to at least buy some of those bonds at a slightly higher rate than what they're able to buy this year. So from the debt market perspective, we think there's going to be opportunities in the Eurobond space. So government raising sovereign Eurobonds, and also from the domestic market as well. So we expect to see a lot of bond this year, for 2021 rather.
Now, when you talk about budgeting now, is it, some see it as a fiscal responsibility, but should it actually be a fiscal responsibility, or should individuals also have a budget?
Yeah, so that's a very good question. I think budgeting cuts across everyone that has to do with finances. So the federal government, corporates as well, individuals as well. So if you have finances, that means you have income, you have expenses. You need to be able to plan your income and your expenses. Truth of the matter is that you don't always have the sort of income that you need to meet all your expenses, and that's where budgeting comes in. There are certain things you need to achieve, even from home front or even in channels TV, for instance. If everybody had all the means or you have limited resources, then there's no need to budget. So because individuals as well, you earn salaries, and salaries are not limitless. So you need to be able to budget based on the salary that you have, be able to plan your expenses and ensure that you're able to meet certain expenses based on what you're coming in. The ones I can't meet, for instance. So how do you intend to meet those expenses? And really, that's what budgeting comes in. Benjamin Franklin said something. He said, if you fail to plan, really, you plan to fail. So budgeting cuts across everybody, not just a fiscal responsibility. I know a lot of times a lot of people blame the government, the government is not able to budget effectively. But on the upfront as well, we all need to plan. And good enough, 2021 is coming. This is a good time to begin to set your budget for 2021. 2020 hits a lot of people by surprise. There are a lot of unexpected, there are a lot of shocks. The pandemic came, nobody really planned for the pandemic. While some people that have budgeted and have maybe some emergency fund, they would have been able to absorb some of the shock rather than people that had no plan or had no budget. So it's critical for everybody to plan either fiscal responsibility and also on the individual leg as well.
But how easy is it to plan and live according to your budget when you look at the rising inflation, for instance?
Okay, good question. So inflation is something that nobody likes, right? At the moment, things are probably double the prices, and really income has not grown as much as you can. But just imagine if you never had a budget, and just imagine if you are spending all that is coming in. So with budgeting, you're able to meet certain obligations. With budgeting as well, there are certain things that are not priorities, so those things can wait. So in budgeting, you have your scale of preference, those things that you need to attend to. So there are things that are urgent, there are things that are necessity. So for instance, you need to pay your house rent, those are necessities. You need to pay school fees, for instance, for your kids, those are necessities. So yeah, budgeting helps you to prioritize, and those things that can wait, you might need to delay it. So that's what budgeting is about. Things that are not priority, you can wait, you can allow it to wait, and things that you probably need to scale down on your so for instance, you used to buy something that was premium, and based on your income level, you can't afford those things that are premium. You might need to come down on the ladder of that commodity and probably get something that's less expensive but can still meet or achieve that need. So that's what budgeting does for you. It makes you realize what your income is, and now begins to allow you to identify what is priority. And if you need to scale down on maybe a commodity on your choice, then you are able to scale down. So that's what budgeting does for you, yeah.
Now, just like you mentioned earlier, the pandemic has underscored planning needs. But what are the trends that we have seen in financial planning so far? Okay,
so much has happened in 2020, and it's quite a historic year. Sad enough, people lost loved ones, people lost jobs, and even close ones as well. And what we've seen in financial planning in recent times, that people are beginning to update some of their estate planning. Some people didn't have estate planning in the past. Now it's quite important that you have an estate plan. And really, that's a plan to transfer your inheritance to loved ones when you are gone or you know one, you are no longer around. Some people never had a will, for instance. Now people are beginning to being conscious of having a will, having a trust. What are my plans if I'm no more, for instance? People didn't used to have insurance, for instance. Yes, the penetration is still low, but people are now beginning to take that more serious in Nigeria. Something happened to me, I think about a year ago, and I had the car insurance on my car, and it expired, and I just kept delaying it. I needed to go and renew my insurance, and just maybe like 2 days before I was going to renew it, somebody hit me, and my car was damaged and all that. If I had an insurance, for instance, insurance would have taken care of the damage, so I had to pay excess. So that's what insurance does for you. It helps you to take some of the pains or some of the headache you would have copped out a lot of money. Insurance helps you. So insurance planning and estate planning, that's one of the things we are seeing since the pandemic started, and it's quite remarkable. And I think for us in Nigeria as well, these are things that are not big on. I believe in 2021, those are things we need to begin to look at. How do I plan for my loved ones if I don't go around? Are there insurance that can take care of my health? Are there insurance that can take care of my assets? Are there insurance that can take care of my loved ones? So things like that are things we began to see during the pandemic, usually in 2020.
Now, this year, 2020, I mean, has just been a year. I mean, what lessons, in talking about financial planning, do you think that we have learned?
So I think the number one lesson, and really that really sums it up, is one, we need to have an emergency fund. And in Nigeria, really, most people don't have an emergency fund. People just live from paycheck to paycheck, or live from the one salary to another salary. And of course, I can't blame people, right? For a lot of people, salary is not enough. The unemployment rate is quite high, and so our environment is quite peculiar. But I think financial planning is more of a habit, of a habit, something that you start. So people need to have that habit or imbibe it. You need to begin to have an emergency fund. And what is an emergency fund? It's a fund that you set aside for a rainy day. It's a fund that you set aside in case that the unexpected happen. So So there have been a lot of unexpected this year. Like I said, people lost jobs, people lost loved ones, people had to go to the hospital that they didn't plan for. So with having an emergency fund, that can help you to cushion a lot of the effects, cushion a lot of the shock, cushion a lot of the things that you didn't plan for. So I think that's the number one lesson. You need to have an emergency fund. Not that you're praying or hoping for bad things to happen, but sometimes we live in this world and sometimes unexpected happens. An emergency fund helps you to take care of those unexpected. As a rule of thumb, it's usually advised that your emergency fund should be at least about 6 months of your monthly salary. So for 6 months, you are fine and able to adjust afterwards.
But then, what about mistakes? I mean, is it possible to even make mistakes while you're planning your finances?
Oh, definitely, definitely. And some of the mistakes that people make and they can avoid is one, to, like I said, to have little or no emergency fund. So it's one thing to have an emergency fund, but sometimes the emergency fund can be too little. And if it's too little, you might not be able to achieve some of the things that you need to achieve. One is also not even having a financial plan. And I think that is very critical. It's very important you have a financial plan. I did make a quote by Benjamin Franklin that said, if you fail to plan, you are planning to fail. So you need to have a financial plan, a plan to be able to achieve the things you set out to do. And it's because you do have limitless income. Your income is limited. So you need to be able to plan based on the income level that you have. Also, insufficient protection. And insufficient protection means there's no insurance cover, for instance. There needs to be a plan, either a life cover, so for your loved ones, your beneficiary, or you're approaching retirement, for instance. You can have an insurance plan that still allows you to be earning income when you're retired. So there are annuity plans, for instance, that take care of that. So if you stop working, but can keep earning income, you need to be able to also review your financial plan regularly. But sometimes you start out to have a financial plan, events change, and that financial plan might not really make sense. So, for instance, you're on a certain income level, and maybe you lost your job, for instance. You need to be able to adjust your plan based on your current income level. Or probably even have a salary raise, for instance. You need to adjust your plan based on your new salary, for instance. Because you don't plan for the excess money you have, you might squander it or waste it. So there needs to be regular review of your financial plan, and you need to update your wills and beneficiaries. We found out a lot of cases that some people have wills and they didn't update it. Maybe when they had the will, they were not married, for instance, and their next of kin was maybe their younger brother. And so when they die, for instance, and they have kids, they have wife, that will is not catering for their family member because they never updated it, or they never updated their insurance plan, their trust plan. So on a regular basis, you need to update your wills and your beneficiaries. And very important, you also have an estate plan. We heard about a lot of people that they had a successful life, a successful business, but never had a plan to transfer their assets or their estates when they passed on. And so all that needs to be put in perspective. And those are certain mistakes that people make when in their financial plan. Those are things that they don't look at, or things that they don't focus so much on.
What about those that don't earn a salary? What about the petty trader? You know, someone who just earns what is barely enough to feed. How does such a person have a plan? How does such a person set aside money for an emergency fund?
Okay, thank you. So for people that earn daily, the petty trader, for instance, and for a lot of the petty traders, it's interesting to know that a lot of them are involved in like thrift, in a job. And a lot of them, they do daily savings. So a lot of them already have savings. I understand that the money might not be enough. And that's where also investment comes in. So financial plan is a whole lot. It's not just budgeting. Budgeting is part of the financial plan. But when you begin to invest, for instance, also helps you to take advantage of opportunities. So I'll mention some components of financial planning. And one is having a cash flow analysis. You need to understand your current income level and your current expenses. If you don't know what your expense level is, really, you might be spending much more than you are making, and really that's already putting you in a negative position. You need to even understand what your net worth, and your net worth talks about your total assets, and when you subtract your liabilities. So your assets are the things that you own, that your cars, your real estate, your houses, your shares. Those are your assets. Your liabilities are things that you are owing people. So you've taken a loan from the bank, for instance, that's a liability. There are certain things you need to pay. Your mortgage, for instance, those are liabilities. So when you net up your liabilities from your assets, That's your net worth. That's the value of what you are worth. You need to understand your risk profiling, for instance. And your risk profiling talks about what part or where I am in the risk ladder. So, for instance, I'm just starting my career. I shouldn't be investing with someone that is retiring. If I'm starting my career, I can take risk. If I'm in midpoint of my career, for instance, I can't take as much risk as someone that just started his career. If I'm retiring, for instance, I can't take so much risk because I'm not going to be earning income, for instance. I need to live on my investments. So I need to understand your risk profiling. What part of the risk ladder do I fall in? What part of the life cycle do I fall in? So that's very important in your financial planning. And emergency fund is also very important as well. You need to be able to set some certain amount of money aside. Whether you're a petty trader, whether you're a banker, an investment banker, or journalist, you shouldn't squander everything that comes into your hand. Even if it's not enough, you need to be able to prioritize your savings, prioritize your emergency fund, because sometimes there are things that are unexpected, like we saw in 2020, which is a major lesson. Nobody saw the pandemic coming. Some people lost their job. They didn't see that coming beginning of the year. And also protection plan is also very important, which is talking about having an insurance cover. Insurance penetration in Nigeria is very low, just about 1%. But in other clients, insurance is big. In other clients, insurance even own banks. So we need to think about that regard as well. Do I have an health insurance? Do I have a car insurance? Do I have a life insurance? And all those things need to be in your financial plan. Insurance, for instance, is like having a spare tire. Nobody plans to have a bad tire or to have an accident. But the spare tire is in case something bad happens, you're able to change your spare tire and you're still good to go. And of course, an investment planning is also very critical in your insurance, in your financial plan as well.
All right, well, I'll thank you for those tips, and we'll see how helpful they will be in the new year and compliments of the season to you. We'll see you in 2021. Walao Aino is the acting MD at Codros Asset Management Limited.